Well, hello everyone. This is Brian with Traide Masters. This is a short session on how you can understand Sherlock. So definitely want to dive right on in. You guys should be able to see my screen. So let me just dive right in. Today we're going to start a deeper look into our library of Sherlock. Just mainly because I want to start with this one first because everyone gets this one throughout their membership with Traide Masters. So this is kind of a foundational one. It's where everything pretty much started for Traide Masters using the Sherlock tool. So this is about 5 to 10 minutes coaching. It's not a full master class. The best thing to do is jump into our live trading sessions to see this being used in context. So again, feel free to take any sort of notes. Feel free to ask questions along the way, whether it be in the YouTube comment section or via our Telegram. Again, Sherlock is not a crystal ball. It's going to provide you with context. So my goal in this short time is when you open Sherlock settings, you'll know what the key inputs do and what to choose and why you choose those inputs. And remember, zones never guarantee a profit. Sherlock only helps us see potential footprints of institutional type movement. And then we can execute our plan with a little bit more disciplined approach. And I'm just going to quickly go through what you're seeing here. This is Sherlock, and this is with all the bells and whistles turned on. And we're going to turn some of these off and explain what you're actually looking at. So as we've turned off a few things, this is getting our eyes calibrated. Okay, Sherlock is a zone tool. We talk about order flow. When I was working in New York, back in the long time ago, I had a two-week internship, and I was able to watch actual paper being transferred on the floor, and that was what we called order flow. And so, at the end of the day, I was still young. At the end of the day, I'd see stacks of papers, and I could predict the next day how the market was going to open based on the stacks. That's called order flow. And so today it's all computerized. There's no paper anywhere. So we have to look for footprints. So Sherlock is a zone tool. It highlights areas where price moved with force. And that's often tied to that price imbalance or an institutional type participation. So the key and one of the main things is freshness. Although when a zone is not fresh, it doesn't mean that it's not valid. So fresh zones, as mentioned in our general session, pink is our supply or resistance zones. Green is our demand or support zones. And that means that price moved away from that area and it hasn't been back there. So that area is still untested. Okay. Again, does not guarantee profitability, but that's a key context to know. Once a zone does get breached, it changes its color to orange for the supply or resistance and gray for the demand and support. So that's Sherlock telling you the market proved it could push through, okay, those little tested areas. So, and then we have what we call the dead zones. And I showed that on the previous screen where the dead zones are marked in purple and yellow. These are the zones that have already been taken out. And honestly, I don't ever leave those on. Those are strictly for when I want to go back and back test up to see how things reacted to those zones. So it's a great tool for learning on the charts. So again, just so you are aware, Sherlock does not predict the future. It doesn't tell you to enter now all by itself. It doesn't replace any sort of your planning, your risk management, your confirmation. So just understand you still have to do work on anything as it relates to trading. So with that being said, we'll dive into the inputs. We've made it very, very simple for everyone. There's not a whole lot to input. Now you can change your colors if you want. Nothing wrong with that, but you'll see four main areas that you can have an input. The settings panel can look intimidating, but it's really not. You have four things. There are three main dials, and then you have that fourth one. So you have total bars, strength, and how you're going to draw your level. That optional dead zone is the one we talk for back testing and learning. So here's the core idea. If you crank things stricter, if you make things stricter, you're going to see fewer zones, but they tend to be more meaningful. If you loosen things up, you'll see more zones, but you'll also invite some noise into the equation. So remember, our whole goal in 2026 is clarity, structure, execution. So we're aiming for clean and intentional. So definitely take a screenshot of this one because you want to know what each of these inputs impact, because this is your system, okay? And as we mentioned in our town hall, you and I could be looking at the same screen at the same time, doing the same thing, and we can have different trading results. And lots of factors come into play there. So just be aware that take that screenshot, make notes, take questions as well, or ask questions as well, and we'll keep continuing on a lesson. So again, I put something down there in yellow for you. Total bars is simply this. How far back do you want to take Sherlock to search? You don't want an infinite number. It doesn't do you any good. You really want recent, relatively recent cues on that. So more bars gives you more history, obviously, but that can also mean more clutter. So fewer bars keep things clean and recent. And so I start around 1,000 usually. That's the default, but I have adjusted based on how busy the chart feels. So if you're on a fast time frame, anything less than 1 hour, your screen is packed. Reduce the look back. Okay, don't go so far back. If you're on a higher time frame and you feel kind of blind still to the major areas, just increase it. That's the simple way of doing it. I've given you a guide. It's only a guide as far as how far back you go, but take note of that as well. If your chart feels cluttered, then reduce the total bars. If you feel like you're missing context, then increase those total bars. That's really kind of the whole goal of keeping things very, very simple. Want to make sure that you're not trying to find every zone in history. We're trying to find the zones that matter now. Now, with that being said, if you're a high time frame trader, I have seen zones that have not hit for a year or two and be fantastic. So you have, I mean, they can be, I've seen them even hit 5 to 10 years back. They just blasted away from an area, but when they went back there, they did the same thing. So again, history is important, but we definitely want to stay within the context of our trade plan and be more, what am I looking for? Relevant to the current time. Yeah. And so with strength, let's talk about how strength works. Strength is the dial most traders should care about most. This is what controls the quality versus quantity. But here's the trade-off. Extra strong is going to give you fewer zones, but they're typically cleaner. Okay. Weak is going to paint your chart like a Christmas tree, and that can lead to your trading paralysis and even bad trades. So my coaching recommendation is this: on the lower time frames, be stricter. That aligns with what you already feel. Lower time frames are noisier. So on a 5 minute, 15-minute chart, something like that, anything less than 1 hour, strong to extra strong is always a great starting point. On higher time frames, though, you can loosen it up a little bit because the signals are already more reliable. So on your 4 hour and daily, strong or even average can make sense if you want more action without losing structure. I usually keep mine on strong though. But I tend to, if things slow down a lot, because the market does ebb and flow, I sometimes will shift that down to average. Okay. So what my goal is to model what we do and then teach you how to do it, and then let you be able to decipher that for yourself. But one warning, if you go too loose too early, you're going to start treating every zone like it matters equally, and they don't. So use that strength to keep the chart clean and enough to execute. Okay, clarity, structure, and execution. And then we move how to draw levels. Okay, to me, this is the most confusing. And you notice by the chart, we're showing also the past history. I wanted to make sure you guys saw the past history. That's that purple represents past demand. You can see how price went right to it and then popped off. Sometimes it breaks through it and it becomes resistance. So those are great for learning. Okay, and so I want to make sure you see that. But wick to wick is a wider zone. It can feel more aggressive because price can tag the zone earlier and easier. Wick only is tighter. It's more conservative. It's more precise, but you got a good chance you're going to miss trades by just a few pips because it didn't quite get down there. So my coaching recommendation, not advice, no sort of financial advice, my coaching recommendation from watching this and developing this, for most traders, keep it normal. Normal just gives you that nice balanced approach that works well across all the time frames. And when you're in our live zones, we'll talk about wick to wick and wick only from time to time, that we recognize things, and that comes with time and experience. So Go to normal first, just as a starting point, then adjust with purpose. If you're consistently missing entries by just a hair, you consider a wider draw, which is your wick to wick. If you're getting tagged too easily and then stopped out, consider a tighter, which is your wick only. But you only want to do this along better confirmation. Okay, use better confirmation tools to help that. So, and no matter what, your stop discipline matters more than any of these box widths. Okay, you have to have discipline with your stop. That's the key. And then we got the dead zone. As we mentioned, the dead zone optional. Dead zone just means a zone that's already been completed, represented by the purple and the yellow. It is my favorite teaching feature when we really go back and dive in. We don't get to do this very often, but when we do, it's a great tool to look back and see what's happening. It reminds you zones are not magic. It reminds you that zones can fail. And when they do fail, failure itself often tells the story, like, was it trend continuation or a shift in the market structure? So use dead zones in replay mode is a great place to, and back testing, and look for how the price approaches and reacts, and then either respects it or breaks the zone. You usually won't have those zones be blasted through. Usually price will hesitate a candle or two, and then it reacts either up or down, respecting the zone or breaking the zone. So for live trading, if it feels distracting, turn them off. Fresh zones are usually the priority for planning current decisions anyway. And then what's our routine? Things that are fast and repeatable, things that we can do. So let's land this plane with a repeatable routine because, again, clarity, structure, and execution. Execution where traders win or lose. So step one, clarity. Ask yourself with using Sherlock, what is price doing on my time frame? For instance, on the pound US, you can see that the push is up with all the Sherlock demand. Higher highs, higher lows, but the latest candles are starting to stall. That's called consolidation. That's a possible top. So that gives us clarity. Structure is now Sherlock helps us with this. Where are our fresh zones? Not that we don't pay attention to the ones that are not fresh, but fresh demand zone below that current price can be a pullback area. And again, with context, and we show you that in live sessions, especially Sherlock on the Monday evening sessions. Fresh supply above can be a decision. It can also be a target area. And then we go, so we got clarity, structure, and then our execution. Sherlock doesn't enter your trades. You do. Sherlock does not enter your trades. You do. So you need to wait for your trigger. You need to place your stop outside the zone. Your target is the next logical area, and then keep your risk consistent. I would, again, 1% per trade, no more, no less. And if you want to deep dive settings by time frame, examples, and question it, just show up to our live sessions. That will be the easiest place to ask questions, or even put them in the conversation below on the YouTube channel or in Telegram, even better. So that's where your skill is really built. That is our session. Again, to keep in contact with us, here's all of our information. Definitely reach out to us if you have any questions about Sherlock. I hope this was helpful to you.